Back, Zimbabwe's banking sector is slowly becoming sound. The Reserve Bank attributes this to measures to rout out weak banks and tighten corporate governance. It says banks' deposits have more than quadrupled since the introduction of the US dollar. The banks now have an adequacy capital ratio of 21%. That's compared to the regulatory 12% requirements.
The central bank says confidence is returning to the banking sector and that banks will meet the minimum capital requirements ahead of the 2020 deadline.
We increased the minimum capital to 25 million for 2020 achievement, and then 100 million for international banks and large local banks. Most banks are actually going to meet these particular capital requirements by 2017 in terms of the capital plans that we have received.
The central bank expects the sector's outlook to improve as a result of regulatory measures introduced by authorities which have improved asset quality. The non-performing loans ratio has decreased to 14.25%.
Which is actually an improvement from 20.45% as at June 2014. NPLs are expected to decrease further as banks have started disposing their loans to Zamco, which has already bought more than 200 million.
Non-performing loans are projected to decline to 5% by December 2016, but some believe that the provisions to curb insider loans and the abuse of depositors' funds won't deter bankers from taking risks.
Imprisonment not exceeding 6 months, and in some instances you hear sections that talk about fines of $50 a day up to 181 days.
6 banks remain under curatorship and 1 is under liquidation. Nevertheless, the central bank believes it's done enough to rout out the bad apples and that the banking sector is now safe and sound. Shingai Nyoka, SABC News, Harare, Zimbabwe.